Okay guys, just want to go over two trades that I want you all to see a few things. If you've been following my other videos on pivots and things, this will make more sense to you. If not, go back and check out my other videos and it'll help you in the visuals of this, okay? So I'm filming this pre-market the 10th of November, which is a Thursday. All the data I'm showing you is from Wednesday the 9th of November. Just want to go over the meta and BA trades on how you could have played them per the technicals, okay? So meta, we had, just want to show the daily levels I had from a website. We had 102.50, 105.85 and 109.46. So they were the areas I was looking at from a website for potential resistance and target areas on the way up. So we gapped up pre-market on some news of cutbacks of jobs. I believe it was 11,000. So at the open, everything was pretty weak and took a pull. I was watching how strong meta was, so I just want to go through how you could have played this, okay? So we had reason for this trade to make a move up. Okay, so this is the 5-minute chart, guys. Like I said, if you're watching my other videos, this is going to make more sense to you. So I just want to show you something on the 5-minute chart. This blue line is a pre-market high. So we use that as a pivot going into the following day. So you can see on the 5-minute chart where meta had a pop pre-market. The market was basically taking a pull first thing. This came down and it held that pivot. So knowing what we know from the daily chart I just showed you, 102.50 was an area of interest to us. So when you look at where the blue line is, you know, around the 102 area, we put in this armor just above the pivot area. So if you're going to take this trade, guys, you could have took this from the break of this armor, which have held the pivot, and then played it back up, just either trailing it because the market was weak, or, you know, if you wanted to see the daily levels pan out. Obviously we was looking at over 105, the eye of the day at 104.90, but obviously we play in premiums on these contracts, so we don't want to be sitting through any pullbacks with a chance of taking a green trade red or taking us at a loss today, okay? So it was an hold of the pivot, it pulled back, it held the pivot, and then once it broke this armor, you could have played it up. So the beauty of this trade is, guys, you got your why are we getting in this trade. There was news behind this ticker, it was reason for it to go up, and everything else was relatively weak at the open. We held the pivot, and the beauty of this is it's a low risk trade. If you get in on this armor, you know if this pivot fail, you can cut the trade. Or if you hit your stop loss, you can get out of the trade, okay? So let me just show you the premiums of these 102s. So this is let me just show the 3-minute chart. So this is the price of the premiums of 102s, okay guys? You would have got in here around the 260 mark. You know, give or take a few cents wherever you got filled. If you got in around the 260 mark, these went to an high of 355. So there was $95 a contract to get just in this pop. And this only pulled back around $5. So whether your risk was $20, $30, $50, whatever that may be, not only was this a low risk trade because you're using the pivot or your maximum loss for that trade as an exit strategy, but this never really went red. It dipped $5 behind the entry point, but you would have never gone red on this trade, and it would have took you, you know, not saying you would have caught the full $95, but, you know, if you had 2 contracts and you had $50, that's $100 for, you know, a few minutes, or 3 contracts, or even if you had 1. If you got 1 contract, you know, you may have a small account, and that would have been enough just to, you know, give you a bit of profit for the day in a choppy market. So again, guys, when we're looking at these trades, we want to be looking at entry points and what's the best risk reward for us to get in, you know, for these plays, because we want to be risking as little money as possible and trying to maximize our profits as much as possible. So when you're looking at something like Meta that's got a catalyst pre-market that could push the stock, and then you look at the overall market and everything is relatively weak and choppy, and then you see something like this, although this was a little bit choppy, you know, you can plainly see that if you are going to take a trade on anything, you've got a strong stock that's pulling back, it's giving you an entry point at a pivot and giving you an armor. So when this break, I mean, if you're going to get in anything for calls in that type of action, this would be the one to get in. And it worked out relatively good. You know, the contracts could have gone more if you went through the day, but if you was, you know, in this for a short space of time, or you were scalping this ticker and you took the 162 contracts, this would have netted you just short of $100 a contract, and you could have been done before 10:10 a.m. So these are the type of trades that I like. You know, they're quick, they're low risk. You've got your plan, you got your what, where, and how to play the trade, why you're getting in the trade, the reason for getting in the trade, and where you're going to get out if the trade goes wrong. So as long as you got your areas marked up on the charts, guys, you know, these are pretty good trades to watch. So the next one I want to show you is BA. Now, in my opinion, guys, this was a really clean trade. So I'm going to show you this. I put this out on my Twitter. It was part of the members weekly email, which I send out every weekend for the upcoming week on plays I'm potentially looking at for the following week and some trade ideas. So this was the play we had. I liked BA over 161 for the week, and our target was 169 for various reasons I won't go into in this video. But we did that, and as of now, you know, we popped just above it. But the important thing is we've hit our target of 169. It was based off this daily double bottom, and it's been strong for the past 4 or 5 sessions. So from the weekend coming to this week, it was a stock we liked anyway. It was a strong stock. It was in full uptrend, and we was looking for this right side of the double bottom to complete. So with that in mind, we know the stock is strong. How do we actually apply this to the chart and play this on the day? So just want to show you this. Okay, so Monday, this red line you can see here marked up, this was Monday's high. And then on Tuesday, we pulled down and retested Monday's high. And then we did it again later in the day, retested Monday's high, and the previous day pull and hold on Tuesday before making a move back up. Okay, so that was Tuesday's action. So let's go to Wednesday's action. Here's your red line. So we pulled pre-market. We know the stock has been strong all week. And these are one of my favorite setups, guys. When you've got a strong stock that pulls back to a specific area, you know, you're waiting for buyers to do something. It's the same thing on puts. If you've got a weak stock and the stock is popping into an area, you know that sellers are going to do something. These are the best plays in my opinion. And again, it's a low risk trade. This is a 5-minute chart. You got your armor just above that red line. You can see the buying pressure stepping in, and then it makes a move back up. So this stock went from about 167, 168 and touched 171. So if you was taking note of the action for the previous 2 days, knowing the stock has been on a bit of a run, bit of a tear, we're getting close to completing that right hand side of this double bottom. Yeah, so if you're taking note of all that with all those factors in mind, and then you see this stock pull into an area, you've got to ask yourself, this bounced here twice the previous day, which is also a retest of the high of the day before. So if you were going to take a risk in the market and play any type of reversal, these are the ones to take. And again, you know your exit point. If this trade was to fail, this end to tell traders these are going to guarantee to work every time. But the beauty of these is, if these trades do fail, you know it's a low risk trade, you know where to get out, and you know that you don't lose much money, and it's a good area to see if the trade is going to work. So when you put all those factors together, guys, these give for 2 clean trades. So if you had these on watch going into Wednesday, and you had all your charts marked up, these are 2 relatively clean trades you could have took for, you know, a nice run and a nice reversal at the open on Wednesday. So I hope this will help, guys. If you're not sure about how I map out my pivots and support and resistance area, check out my other YouTube videos. They'll make it clear why I do it, where I put them and everything, and then come back and watch this video and everything should make a bit more sense if it doesn't already. Okay, cheers guys.